In today's video, I want to introduce an advanced indicator on TradingView that predicts the future price action. To add this amazing indicator to our chart, here we click on indicators and we search the next pivot, this one, which is written by someone named Koyosef Trading, if I'm pronouncing the name correctly. Alright, as you can see, the indicator has added two lines into the future. The white dotted line is projected price action, actually the path that the price will probably go, and this green line is zigzag projection. In other words, how the zigzag line will probably look like in the future. Please pay attention that you shouldn't only use this projection for entering a trade, and you must also consider other aspects of technical analysis, which I'll explain later in this video. Just make sure you watch this video until the end so you learn how you can use this prediction in practice. Alright, now you may wonder how this indicator came up with this prediction. As you can see here, we have a blue area which has covered the most recent 20 candles. By default in this indicator, it's set at 20, and it's actually correlation length, which means that this indicator checks the sequence to find correlation or similarity with this part in the past. If I move backward, you can see that here the indicator has marked another sequence. The blue part is similar to the most recent sequence that I just showed you, and then we have this white part that the indicator uses this part for predicting the future. Why? Because basically market participants repeat their behaviors. Actually, this is one of the basic concepts in technical analysis, that history repeats itself, because behind all these price movements that you see on this price chart are humans, and humans tend to repeat their behaviors by remembering what happened in the past and taking a proper reaction. Actually, it's because of this fact that we have support and resistance levels, we have trend lines, we have patterns, and so on. And this indicator is trying to predict based on this simple fact that if based on this price action, after that the market became like this. So if again we have a similar situation which happened here, it's highly probable that the price action after that will be similar to the one in the past. By default, the forecast length is set at 50, which you can decrease or increase it based on your needs. And also by default, the method that it uses to find similarity is set at cosine similarity. There are also other methods of finding similarity, but based on the testings that I have done, cosine similarity is the best of them, and the projection usually better matches with other aspects of technical analysis that you expect them on your chart. Alright, now let me teach you how you should use this prediction in practice. You should never rely only on this prediction for entering a trade, and you must look for confluence with other levels to confirm that the price is probably going to decline like this. For example, here you can see that the price is in a downtrend, and because we have two sewing highs, we can draw a trend line which is actually a downtrend line starting from here, which is extended like this into the future. So because we are in a downtrend and this is our downtrend line, pullbacks to this downtrend line are expected. And you can see that this indicator also predicted that the price will go up to around here, which is around our trend line, and after that the price will decline. So until here the prediction of this indicator makes sense. Besides this downtrend line, we have also a support level here at this level, and you can see that here the support level is broken, so it becomes a resistance level for the future price action if the price doesn't turn up right away here. So here around this zone we have a strong confluence level. On one side our downtrend line is acting as a resistance level here, and on the other side we have this resistance level here around this zone. So here in this zone we have confluence of two resistance levels, and our indicator also predicted that the price will go up to around here and then it will decline. So in practice, this is the potential area where you can enter a trade, having a long red candle with above the average volume, or a lower risk entry here when this support level is broken if the price is going to move like this and creates a support level here. This can also be a confirmation for entering a short position if the breakout is done by a proper candle and volume. This was an example how this indicator should be used, and in practice you can use this indicator in conjunction with any other trading strategy, whether it's price action strategy or indicators. The point is that this indicator is not a standalone buy sell indicator, and it's just a guide and projection of the future based on the past price action. Alright, that's it. Thank you for watching this video. If you have any questions, feel free to ask and leave a comment for me. I'll answer your questions as soon as possible. If you haven't subscribed to my channel, please subscribe and hit the bell so you get the notifications of my new videos. See you guys in next video, and good luck with your trading.